time comes, don't postpone it. When others down and out, you don't condone it. Truth be told, yourself is your toughest opponent. When your moment comes, grab hold and own it. Never let go, stand tall and hold tight. Overcoming obstacles is the objective in life.
Welcome to Man vs. Theta. Today I'm going to be giving a trading tip, particularly one on what do you do if you have options and a stock moves in your favor significantly in pre-market or after hours, right? I'm going to give you an example from today on AMD. So let's take a look at the chart. All right, so let's just say that you had bought $60 calls and you're in at 59, and after hours, we had a weak market close, and after hours there was some news on Intel's earnings that came out that drove AMD into a big huge rip, right? I'm sure that there's shorts caught here too, thinking that, hey, market's going to dump and I'm just going to ride this short down, and anyways, it ripped up high pretty hard here, right? What do you do, right? Say you had 10 calls that you bought for, maybe let's just say it cost $1. I'm not sure. I don't remember what they were. Let's just say that you had 10 calls of $60 calls for $1 or something, and it gaps up to, and it's at $64, right? And you're like, wow, you paid $1,000 for these 10 calls, and if you sold it right here at $64.50, you could lock in $3,500, right? Sell for $4,500 right now, and you can lock in $3,500 profit, right? And because what you don't know, we don't know if this is going to go to 65 or if it's going to go to 70, or what if it goes back to 60, right? Well, if you've got the capital, right, and you've got a margin account, here's what I like to do in these situations. I would go short, right? And I would go short the shares. This way I can lock it in, right? So let's just say I at 64.50 and I had 1,000. I might do 500 shares, right? I'm like, you know what? I'm really happy with this. I'm going to lock it in. I'm confident there's going to be a pullback or something, and so I would lock in. I would short 1,000 shares here at 64.50, and know that right now I made $3,500 in an hour doing nothing. And it could go to 70, could not. That's the risk I'm taking. But say that this was just a squeeze and it gaps down, right? And it comes back down to 60, right? So hey, or 61 even. You're like, hey, okay, I didn't lose any money. I'm not losing any. Or say it goes to 59, right? And you're just like, okay, then you might be red, right? If it goes to 59 or 58 tomorrow overnight. And then what if it goes to 70? You're like, well, if I sold or shorted here, I'm gonna lose all of that profit I could have made, right? So that's all the stuff that goes on and happens here. But here's the general principle I'm thinking about is don't let a good gap go to waste, right? And so I'm going to short this, right? And let's see how this plays out. Let's go through both scenarios. Let's just say that, and why I say don't let a good gap go to waste. If you went short here 64.50 and it dropped back to 61 or 60, guess what? You can cover those shares at $61, and from what you sold, you covered here, say you covered at 61 from 64.50, that would have been 3.5 points profit, $3,500, and you still have your calls. That $3,500 basically paid off your 60 calls, so you can pocket $2,500, right? Free money because you shorted this. Right? $2,500 locked in. Doesn't matter if it goes to 58 or 59 or 0. You will always have that $2,500, right? And then now if it goes up back to 65 or 70, guess what? You got a free trade. Doesn't matter. You can sit on those options and let it do whatever it wants to do, right? And so it's nice, right? Because you've got that covered. You can pocket that and you can let those options ride and see if it's going to pay you. And if it doesn't, you have $2,500. Otherwise, maybe you exit at $2 later. You have that $3,500 that you had earlier. You sell it for $2,000, so you've made another. You cost you $1,000. You still have another $1,000. So you made $4,500 on this trade. By not wasting a good gap. Now you're like, hey, what if I shorted 1,000? When you short 1,000 shares at 64.50 and it runs up to $70, you're a fool. Maybe. But here's the thing. It goes up to $70. You're gonna be upside down, right? If it's not, well, one, there's the probability of it going to $70 overnight is very, very slim on AMD, but it could happen. Anything can happen. So, but let's just say it did. Okay, you're gonna be red starting the day on those shares, minus $5,500. But are you really? No, because you have those 10 calls, right? So those 10 calls at $70 are likely to be worth $10,000, right? Because you're 60 calls, if they're worth at least $10,000 plus whatever time you have on it, and Vega, and so you're going to be able to sell that for at least 10 grand. So even if you have those that you're dead, you're short, or you're red $4,500 or $5,500 there, you have 10,000 in profit from the options. You net still have $4,500 locked in as profit, no matter what, right? Well, that's great. You still have 4,500. You started off the day with being slightly red or a little bit green on those calls just overnight. You just made that money, but you're like, oh, but I could have made 5 grand more. Yeah, but it could have also gone to zero or gone back to being red. You don't know, right? So and the chances of that are slim. You want to have consistent gains, right? You don't need a home run every single time. That's the thing. You're in this for the long haul, and so it all depends on what your plan is. But here's the crazy trick, right? You don't cover those you can sell those you can at 70. There's a really 70. There's a damn good chance that this is going to have profit taking at the open. Okay, it's just be insane for it not to. And so there's a good chance that it would. So let's just say that, right? So then it's $70. You sell your calls for 10,000 profit. You still have that short, and now you might even go, hey, it's going to drop, right? So you can either buy puts or you can short more at 70, depending on the size of your account and everything. But let's say you didn't even short it at 70, right? So now the stock has some profit taking, and it drops from $70 down to $65. Right? Or say $66. Now, what happens there is that, say that you cover at $6,600 or $66, you're still down from $64.50. You're still lost $1,500, right? But instead of having just locking in and having $4,500 at profit, $5,500 of profit at $70 by closing both positions out. When you closed out the calls, you have that $10,000 in buffer, right? So even if it went to 80 on that short, it would need to actually go to 80. It would need to go to 75 for you for it to offset your calls that you had. But you don't stop out before that happens. At least I hope you would. And anyway, so if it comes back down to say $66, that's another $4 grand that you can pocket, right? So now instead of having $5,500 profit, you'll have $9,500 in profit. Okay, so spend some time rewind this video and listen to everything I talked about here, and to really internalize what I'm talking about here, and then go through some scenarios for yourself about what the risk reward is. And say you just have a cash account, then this technique doesn't apply to you. You're just not there yet. But say you have a cash account for your options, and then you also have a margin account. Well, you can do it in 2 separate accounts. It doesn't have to be in the same account, right? You just transfer funds back and forth as you need. But bottom line is, don't let a good gap go to waste when you have options, right? I can't tell you the number of times that I've been in option trades, and I'm sitting here and I'm super happy. I know most of you have been there before. You've been trading options before for a while, where you see this big gap up and you're like sitting there going, man, I'm going to make bank at the open. You're super excited. And by the time it gets to the open, it's back to your entry, or sometimes even red, or much smaller gains than you had before, and that just sucks, right? You don't need to let that happen to you, right? Take advantage of the gap, have a margin count set aside, figure out what technique works for you, find a way to take advantage of all the different tools that trading the markets give you, right? You don't have to stick to just doing calls and puts. You can take advantage of shorting. You can take advantage of buying common stock, and say that you had puts and instead you had a big gap down. You could do the same thing, but just an opposite. So instead of shorting, you'd be buying shares to offset the gains in your puts. So again, hope this video was very helpful. Be sure to subscribe and to share your comments and tweet about this, especially if you think that this video would help others, especially this trading technique. All right, see you guys next time, and thank you for watching.
You don't condone it, truth be told. Yourself is your toughest opponent. When your moment comes, grab hold and own it. Never let go, stand tall and hold tight. Overcoming obstacles is the objective in life. Doubters all the night, and onto them you shine bright. Cause inside your head, on goes the light. Ignite. Fight for intuition upon the stars in the night that glisten. To you they listen, to be you send it a wishing. When your time comes, don't postpone it. When others doubt and out, you don't condone it.